Yeah, good afternoon, everybody. Welcome to Wednesday live session. Right, so as usual, we're going to start from DXY, and of course, we are still bullish on DXY, but excuse me, please. So even if we know that it's still bullish, but of course, it cannot go on a straight line. We expect some sort of correction, you know, at least something like this over here before it resume the rally to the upside. Okay, it is expected on the weekly. Then if you take it to daily, you see that even its momentum to the upside is not there. Okay, because with this, we should see some sort of divergence, lower low here, lower high here, and then higher high here. Can you see? So we are beginning to see some divergence, okay, showing that this will have to proceed to the downside, okay. We need some corrections and take it to 4 hours. See that show you on the weekly that we need something that is like big like this, okay. We need this kind of correction. We need this size of correction. Yeah. Getting it now. So how it will get there, we don't know, but I gave you an instance before where I was expecting maybe something like this, go back like this, and pulls down like this. Something like this will be okay. If he doesn't want to make something like this, he can make something just a big one correction and a big one and a move to the upside. Okay. He can also give us something like this. But in the final analysis, I would like to see a DXY that correct downward to break this low. That would be very okay for us to proceed a move to the downside. Okay, that is for DXY. All right, so can see clearly clearly some people are selling the major right now. Okay, so I think at this point in time, when somebody is looking to sell the majors, you have to, think twice, because some of these majors in themselves are controlled by whatever that is happening here on DXY. Okay, DXY controls a lot of them. So if, for instance, DXY, we are anticipating a sell move there, okay, and then somebody is also selling EU, for instance, Euro USD. See, somebody is now saying, oh, he wants to sell. True, of a truth, this is a downtrend. Okay, this is a downtrend, and it's it's also logical to think that after making this push correction, then you should expect another push. Okay, it is logical. But then if you are looking at the structure that we are saying here, right here on DXY, from weekly, we have done it from monthly to weekly, daily to 4 hours. We need a correction. Market don't just go straight on like that. The market is going, just extending its rally to the upside like that. You've got to be very careful at a time, because you know this correction will come. That's the same thing we are talking about on DXY. Correction is due, and you can see that each time it corrects, it makes a little push. It corrects, it makes a little push. It's not making a big push like here again. Can you see? It's not making that big push again. And that is to tell you that it's gradually losing steam. to the upside. And you can see it clearly from divergence. Was it on a daily, we did it, or on 4 hours? Yes, on 4 hours. You can see it. There is clear divergence. Can you see? Can you see? Can you see? So right now, I will not look for sell opportunity on Euro US dollar. I won't look for sell opportunity on AUD USD. I won't look for sell opportunity on GBP USD right now. Right now, I won't. You get now? Because I am anticipating a correction, a bigger correction on DXY. And so if I'm anticipating a bigger correction on DXY, it will not be right for me to be looking for sell opportunity on euro dollar again, or sell opportunity on GBP USD. There's nothing. Look at this move. Even though somebody can decide to say, oh, this is a corrective structure and is expecting this, it's logical. It's logical, honestly. But as logical that it may sound, if I have this bullish move from here, okay, I have this bullish move from here, what is in this one that I will be looking for sell? Guys, let's be reasonable here. What is in this little move here that I will be looking for sell? At least let me see a push like this, a push. Then I can now be thinking, okay, any corrective structure, I will not take a sell. So we should be guided. We should be guided, guys. So we have seen what we are expecting on DXY, that we are expecting a correction. So, and before market will really make a lot of sense, is until we see a good push on DXY. When we see a good push like this on DXY, then we know that it's going to correct and then push more. Okay, what is going to be very important to us is, after seeing this push to the downside, this correction is going to take a while, and then market is going to be silent again. That is the problem we've got to face. Just like I told you before, this correction you see on DXY, if you go and check all the pairs across board, whether USD related or not, you are going to see that they will be slow. There won't be meaningful push there. Okay, now you are seeing this move. It's going to be slowing down, but it's going to be going down gradually. That is the same way you see it across board. All pairs will be moving. Can you see? I had a GBP CHF buy since yesterday. You still draw down of about 20 something pips since yesterday. Can you see? So market is going to be very slow, but whatever be the case, we are going to just take it like that. So DXY, don't expect upside for now. Expect correction to the downside for now. Expect correction to the downside. Then euro dollar, if we are expecting correction to the downside on DXY, then expect that euro dollar will also correct to the upside. We also correct to the upside before we make another move to the downside. Because if you check the weekly, you see that euro dollar is in a downtrend. Okay, just completed this corrective structure. Okay, moving in a downtrend. But of course, at any point, we need a correction for us to push harder. Okay, and then if you look at 4 hours time frame, want to see what is happening on 4 hours time frame. Okay, on 4 hours time frame, the way I'm looking at this, okay, I'm looking at this move not to be too corrective. It's too sharp for me. Okay, it's too sharp for me. So I am anticipating a situation where we will have a corrective structure of that push, and we'll have another push to the upside. Do you get it now? So anytime you see a major move in the market like this, a move like this, okay, and the correction is coming to almost 50% retracement and it's coming very sharp, know that you are going to have a correction and a push up. That's just the logic. Let's take the fib of this leg down. Can you see that this first leg here is almost hitting 50%? So, and anytime you see it and it looks so sharp that way, then you know that you are going to have a sort of corrective structure here. Okay? And that corrective structure, if you can get to 50 or 61.8, depending on the nature of the corrective structure, you take this leg up. Okay? When you get to around like 1.0400, we'll now be looking for sell opportunity to the downside. Do you get it now? So can you see that the correction to the upside that we are looking for, and the correction to the downside we are looking for on DXY, we're also having the same line of thought on as in correction to the upside on euro dollar. So what I'm thinking we should be expecting now is, assuming the move is over here, then we should look for corrective structure that will take us to this level. Okay, from here can make a move to the upside. Don't forget, there is nothing to suggest here that this impulse is over here, because you can still have this move. Okay, after this correction, here, you can still have a push up. Okay, and in that case, you have to take your fib, you have to extend it to the upside. You cannot use a fib on an impulsive leg if that impulsive leg is not over. It's only when it is over that you can use your fib. Right now, any fib we use on this leg is fake. It's not correct. Why? Because the move itself is not over. There's nothing to suggest that this move here is over. Nothing, absolutely nothing to suggest that the move is over. Why? Because this correction is nothing compared to this push up. So we cannot be looking for sell opportunity here. So what I would advise that we do as far as euro dollar is concerned is that we should probably wait for this to make more upside. You can see we have a good supply here. Probably you see a reaction here to make a correction back to this level. Then we'll now take a buy from here to the upside. Do you see it? That's the idea in euro dollar. In that case, this move here will just be your impulse. This will be your wave A. Okay, this will be your wave B to the downside, be your wave B, and then you have your wave C. That's just my plan for euro dollar. Then from here, you can now look for sell opportunity to the downside. You really need a bigger correction right now, guys. Okay, so the same thing is applicable to euro JPY. You know, at this level, we said that we are having a daily corrective structure here. Okay, and we have this move. We need this move to the upside. Okay, so you know there is a way I use some of these pairs that are correlated. There is a way you use them to balance the other. Okay, if the structure on euro JPY is clearer than the structure on euro USD, in as much as you know that both of them are correlated, you can use the idea of the structure of the one that is clear to at least give yourself an idea of what is most probable in the other one that is not clear. Do you understand now? Now, the structure for euro JPY is clearer than that of euro USD. So if we are getting a buy opportunity, if we are looking for a buy forecast on euro JPY, then when you go to euro USD, you should be looking for sell. You should be careful with the way you look for your sell. So you know that it has more upside to go. That's how I look at the market. Okay, it has more upside to go. Do you understand? And moreover, if you look at this move here, you see it. It kept making a lower low. This one is making a higher low. Can you see? It's making a higher low. Okay. What does it tell you, guys? What it tells you is that we need this correction to the upside. This correction to the upside is needed. Okay, we still have momentum to the upside. So I'm not saying the sell will not come, but we have to be careful with the way we sell euro dollar. Here, I've seen a couple of people that send me a message that they want to sell euro dollar. I say, be careful, be careful. I do not see a sell there. You are not here. You are not here. You are not here. Look at where you are down here and you want to sell. Doesn't make any logical sense. Do you get now? All right. So euro JPY, all I need is, of course, I've told you my trick that I used to get whether the end of correction is here. The trick is simple. If I go to my indicator, I'm going to see the two align to the bottom. When the two align to the bottom perfectly, I know that there is end of correction. All I need to do is to go to 1 hour. I want to go to 1 hour. I want to see where the push arises, where the push come, and I'm looking for correction. That's all. Now I'm having the push. Here's the push I'm looking for. From this level to this level, that's the push I'm looking for. What of the correction? I have to get it. Okay? We have to what? We have to get the correction. So in getting the correction, all I need to do is to take a fib of this impulse. Okay, I take a fib of this impulse. I want to try and be patient. Can you see that it's going up? It's not even very sharp. I want to try and see how, if this push is over here, I want to see how I can get a correction back to this level. When the market gets to this level, I will look for opportunity to the upside. Okay, it is from here I will look for opportunity to the upside. So that's why right now there are no much setup in the market. It's just like we are just looking. Okay, because even when all this were going to the upside, even though we knew that the pair was going to buy, it was not given a clear setup. Can you see? It was not given a very clear setup. Okay, at this level now, you are expecting correction. Look at what it gave you, shallow move and a move up. Okay, at this level now, you are looking at it that, oh, good, structure, taking. You want a correction back to at least average price here. It didn't give us. It kept moving. It moved again, move. You are expecting at least a decent correction for you to get in. It moved again. Can you see? So this is how this pair move for more than 300, 200 to 300 pips without us. Can you see? At least from this level, almost 400 pips, 350 pips without us. But you can see that it was not giving a good correction. It was not giving a desirable correction. And that's the problem. Do you see? Euro GBP. Okay, Euro GBP. You look at this pair. I've forecasted this, I think 2 weeks ago, that there's possibility of us getting this structure. See this structure? You see this push, correction, and push. This is a 3-wave structure. Okay, and this 3-wave structure is being corrected by another 3-wave structure. 1, 2, 3 in the middle, 1, 2, 3 here. So, but you know that there is no structure called 533. It's supposed to be 335. Do you understand? So for that reason, this impulse, this is 3, this is 3. You might end up getting 1, 2, and 3 again. All right. You can see that you have impulse, 3 wave up, 3 wave down, 3 wave up, and then you now have another impulse here. This is now what is called a structure. Okay, because you have 3 here If it is 5 here, that is good for us. It means it is 5, 3, 5, which can be zigzag. But this time around, it's impulse here, 3 wave up, 3 wave down. You need a 3 wave up to now form a structure. This will now complete a structure like this in the middle. Then this wave down, that's very short. We have another wave down here. Balancing the structure, then the 3 waves here will now come here. This makes a perfect sense. Okay, that means I'm beginning to have a bullish bias for Euro GBP. Okay, but let's take it one step at a time. If you go to your RSI, you see that it's getting close to 50. It's about to cross to 50, meaning that it's bullish. So what I want to do is I want to look at how I can get a setup on 1 hour time frame. Okay, I want to see how I can get a setup on 1 hour time frame. I actually got a setup here yesterday, but I was not convinced of volume in the market. I was not convinced. I had to close the trade, all right, in small profit. You see here, you see a push here, you see another push here, okay? But right now, why I don't want to be involved is that I'm feeling that on this wave alone, on this wave here, I'm feeling that this correction here, the push here is getting far from this level. It's getting far. I don't want to get involved into a trade that is closer to supply, you know, or where you are going to have a bigger correction. Because if you look at it, you have with 1, 2, 3, 4, 5. So this might just be the last push, guys. And if this is the last push, before you have a bigger correction, that will now launch you for further upside. Do you understand now? So that's why I don't take a trade at this level. It's very, very risky for me. But nevertheless, if you are a scalper, there is nothing wrong in making this projection, this last push. Okay, look at this level, and then of course you have a big demand level there. Okay, you have a big demand level there. Just look into this. Then another thing you can do is you look at the corrective structure. Are you able to define it? Yes, we can define it right now. How can we define it? Look at the big push. Look at 1, 2, 3 inside, and look at this one. So this is a corrective structure in the middle, and you have this wave down, then you have this wave down. This is a complete corrective structure for more upside. So if you can get to this level for me, guys, that would be a good trade to the upside. The trend still continue to break this top again. So why I said is Kappa can consider this is that if it comes to 85, can set alert at 85. 8500. Okay, can come to 8500, guys. It can be a very good trade for just 50 pips. I just target 50 pips for this trade. Okay, 50 pips, because the risk to reward is very okay, because if you bring this level, stop loss cannot be more than just 10 or 15 pips, and then target 8550. Okay, that's about 1 to 5 risk to reward. Okay, for this trade, 1 to 5 risk to reward. Of course, you should watch the price action at the entry level before you take action. Is that okay now? Okay, so next is GU. Okay, 2 things will happen on GU, because right now, of course, we know that of course, you know that all the majors now, though they are bearish, but because of what's happening in DXY, we think they need some corrections. Because if you look at them very well, you see that as bearish as we think they are not pushing down. They are not pushing well. They are not pushing well. Okay. And the reason why they are not pushing well is because they need correction before they can push further. You know, for almost 2 weeks now, I've been telling you in some of the videos that I made that this wave here, this one here, must come very hard here for GU to have a meaningful push to the downside. If it doesn't come up that way, it's going to be very hard, you know, to continue to push down. Where is the volume? That is the problem. Where is the volume that will push this one down? That's the volume. But if it can push this way, can you see? This is a good structure. This is a good structure.
Hello,
look
sir.
at
Yeah. Good afternoon, sir.
Yeah. Yeah, who is that? Okay, this is a good structure for downside. You understand? So that is why even if GU is to keep selling here, I won't sell it. The reason why I will not sell it is that
I don't know what is happening, sir.
Hello, what's it? What's that? Are you not hearing me?
Can you hear me?
Yes. Who is not hearing me, please?
I'm hearing you, sir, very loud and clear.
Please, whoever is not hearing, you should check his side, okay? Thank you. All right. So even if GU should sell here, I don't think I will join the sell, because it can come this way, break this low, and start upside again. Because what is important for us right now structurally is this structure must complete. This structure must complete. So for me, if GU is selling here, well, no problem, you can sell, but I won't be happy seeing it selling here. But I'll be a bit happier if it's going up, even though I'm not buying. I want it to go up. Okay, if it goes up and complete this structure, that would be nice for us. It will be better for us to take it from there to the downside. Okay. What next do I want to look at? The same thing is applicable. See, all of them are they're just in one place. Look at, you can imagine, look at this one. Look at this one. One place. Okay. Look at the divergence, big divergence. Look at it here. Look at it here. Okay. Look at it here. There's divergence. So everything is in line for this pair to push up. You can see attempt that it made to push up. Look at it. Look at the attempt. And when you take the fib of that impulse, you see, it corrected to 61.8. It pulls down. It has to come down to that level. We're expecting it to at least push up. All right, to at least push up, break all this high before we can find a comfortable level for sell. Okay, before we can find a comfortable level for sell. If you look at the structure on GU, then for G card, we would love it to also come here. This is a good structure for the downside, because this pair has more places to go. If you look at it on a higher time frame, look at it on a monthly. Can you see? On a monthly, this is a balanced structure. This downside will come for this. Okay, so you have a move, you have this impulse, you have 3-wave correction here before you have this impulse. Can you see on a monthly? So right now, it's still it has not still gone far, okay, to the downside. So, but we want a correction for it to be able to push hard. And if that correction is not big enough to push down, will be a bit difficult for it. Can you see? To be a bit difficult. That's what we are talking about, guys. See? So that's why we need this move. We need this move to the upside. Okay? We need this move to the upside. You are getting the gist now. But then, how can we even take opportunity if that move to the upside should come? How do we take the opportunity? Of course, you have to wait. You see one powerful move to the upside. Okay, you see powerful move to the upside that will clear all these levels. Okay, then from there you find correction before you look for a buy opportunity to the upside. The same thing we are expecting this one to do. You know, I've sent a markup. I've sent a markup to you on AUD USD, this one. Okay, if this one correct, then we'll have a move. We definitely have a move to the upside, but we need that correction. If that correction doesn't happen, we're not going to take action on it. And you can see that the correction is getting, is starting little by little. All we know is that after we broke this level, let me do it. First and foremost, we need to check, because this is an ending structure, okay? And a correct ending structure must appear with a divergence. That's very, very important. Can you see? The ending structure comes with a divergence. You see it on both indicators, both the RSI and the stochastic. It comes with a divergence, okay? At times, why I have to use RSI for divergence at the expense of stochastic is that RSI is more accurate than stochastic. Let me show you. It's more accurate. But when you are looking for trend continuation, where you have to look for hidden bullish divergence or hidden bearish divergence, then I like to use stochastic. In that case, can you see? Can see that it's really making a lower low here. Can you see? Lower low here, lower low here, lower low here. What is it making here? Low here, higher low here, higher low here. Can you see? So because of this, we knew this move was going to come. Of course, my signal channel, we took a little profit here last week. Then, but at this stage here, we need a correction because we have broken out of this range. And except if the market wants to give us a running flat, okay, the market wants to give us a running flat. That is the only condition that this will be enough, which I don't think this will be enough. Then we now have a move to the downside. So how do we confirm that this is going to give us a running flat? I have a test, a divergence test that I use to confirm the possibility of a running flat. Let's look at it. Right now, at this point, this is the point here. This is another point here. Check it here. This is the point here that corresponds to this level. And this is the point here that corresponds to this level. So I want to check whether you have a higher high, okay? And then you are having a lower high. So can you see? So right now, with what we are seeing here, there's possibility of euro dollar making a move to the downside. There's that possibility, okay? But I don't trade it. The reason why I don't trade it is that the divergence that is shown here could just be the divergence that will give us this three-wave pullback. Okay, but the market will tell you it has actually made a pullback, whereas that pullback, that divergence you saw was just for the pullback. Where is it? The pullback to end here, and then from here you see another move to the upside. That is the situation where you see structure will now transform itself from a running flat to an expanding flat. You know, that's what we discuss under structural transformation of a flat corrective structure. Do you understand now, guys? So before we can make informed opinion about what will happen to euro to AUD USD now, is for us to see a corrective structure. If we see a well-defined corrective structure that is ending at 50 to 61.8, you can take a trade from there to the upside. Okay, good. No, USD card, UJ first. UJ. This is a trade setup, but I don't like it. The reason why I don't like it is this. I usually don't like taking a buy setup in a supply zone. Most of the time, it's going to struggle to perform. It will struggle to perform. Because if you look at this pair now, on a weekly time frame, you see the rally. You see the rally, bullish rally. It needs some cool off. It needs some correction. Okay. And if we take it to, let's say, daily, you can see that, you know, it's not having enough energy again for the upside. It's not having enough energy. How do you confirm that? First, you see this swing, this structure, this level, with this level here. If you look at it, though it's making a higher high, confirming the bullish nature of the trend, but look at your indicator. It's making a lower high. Do you understand now? It's making a lower high. What is it telling you? It's telling you that you are going to have either a reversal or a correction. So if you are already having a divergence on the RSI, confirming or alluding to the fact that you should expect some correction or a reversal, why will you then see a setup and want to take it? Why will you want to take a setup under that circumstance? Do you understand? So that's why I'm very, very careful about this buy setup. I would rather wait, let it break, then give me a massive move this way, and I look for correction and sell. This is better for me. It's better I miss this small move than for me to miss this big move. And you know, there is something in the market. As soon as you make a loss, there is tendency for you to begin to be afraid of the market, especially if you are just starting up. You know it can be frustrating. But if you have been trading and you have mastered your skill very well, even if you lose 1, 2, or 3 trades, as far as you maintain correct risk management practice, you shouldn't bother. But if you don't maintain a good risk management system, that will of course be a bit of a challenge. So let's wait, especially on this JPY pairs. Let's wait to see that massive move to the downside to confirm, you know, the existence of a share pressure. Okay. This is a USD card. Okay, this USD card right here. I still seeing some people sending me they want to sell. Well, I say you can sell, but this wave here is what we are looking forward to replicate here for the structure to become balanced. Because right now in the middle, this is the corrective structure. Up, sorry. This push here is this push here. Okay, this is the corrective structure, guys. You see in the middle, so this is A, this is B, and this is C. Can you see? So this is big A. This A, B, and C is the big B, and this is the big C. So you can see why I'm projecting that this A must be equal to this C. And can you see a push, a correction that is very rough before the push down, a correction that is very rough before it pulls down. But this size of correction here is equal to this one here? No. For that reason, I'm anticipating that this will be a corrective structure for more upside. As soon as it gets here, you can see this wave equal to this wave. Then you can have a move to the upside. And you see that level is tallies with the supply level in the market. Can you see? Let me use a horizontal line. Boom. I see area that I'm projecting. It's a big supply level in the market. So that's how I'm looking at USD card. Good. Good. You know, gold is expected to come to break this low, where it may and it may not, because it did not break the high here. So there's high tendency that it may not break the low. There's that high tendency that it will not break the low because it didn't break the high. So gold still have a little push to the downside. Once it gets here, we begin to look for buy opportunity. But for now, there's no buy opportunity. There's no buy opportunity, and it's not advisable to sell. Even though gold is to break down, if you are not a scalper, it's not advisable to sell at this level because we have gone very, very far. Of course, you know, we missed the trade just because we're expecting this to be the structure. We wanted this to come up here before we take the sell. But it didn't happen that way. Rather, it just made this small move, breakdown, correction, breakdown. All right. So, but for now, there's no action on gold. I'm also trading this NAS 100. All right. Very simple. Corrective structure here. Push up, push up. This has more upside to go. The reason why I still have more upside to go is that if you look at the length of this A, it's not equal yet with the length of this C. It will be equal when it gets to somewhere here. So at around 12,600, we'll be looking for a sell opportunity on US 100. Okay, looking for sell opportunity on US 100. Okay, so don't know if anyone have any pair you want us to check. If you have any pair you want us to check, feel free to share it.
Yes, can you please check CHF-JPY?
Okay. CHF-JPY. CHF-JPY. Okay. All right. CHF-JPY. Of course, if you look at it, even from higher time frame perspective, you see that it has really passed its expectation. In fact, nobody had expected that CHF-JPY was going to break this level. Okay, because at this point we had started looking for the sell opportunity. It kept pushing up, it kept pushing up, it kept pushing up to this present level. But nevertheless, if you look at daily time frame, for this pair, what I do is simple. Once I put the chart right here on daily, I like to look at my indicator and see what it's doing. You see that why we decided that at this point, then when we're looking for sell, that we should close our sell and rather look for buy, is because there's a perfect reset of my indicator to the low, of my stochastic to the low, and then a retest of 50 on the RSI and proceeded upward, which shows a sign of strength. That was what told me that this wave to the upside is going to come, and that this one is not just a correction, it's a continuation move because of this. So once we see it that way, then the question is that how far is it going to go? How far is it going to go? Once we see something like this, we don't want to try to preempt what the market will do, except we see, you know, a move that suggests to us that that move to the downside is around the corner. We want to see that move, and that move will come in the form of sharp move like this. We want to see something like this, this sharp move like this, this sharp move like this. We want to see it happen. We want to see it happen here to confirm that we're on our way to the downside. If it doesn't happen, and this one is moving down gradually, it then means, remember, this has become a corrective structure again. Demand level for a push-up. Remember what happened to Euro JPY. Let me take you back to Euro JPY. Remember what happened? See the corrective structure on Euro JPY, corrective structure, see the push-up. So it's most likely that CHF JPY is also trying to develop a similar structure, because you notice something. You notice this zigzag that appear here also appear in Euro CHF, also appear here. Can you see the zigzag here? But after the zigzag, what happened to CHF? What happened to Euro JPY? It push up and is forming this structure. Okay, let's go to CHF JPY. After the zigzag, it push up. But that structure, this structure here, this one, that Euro JPY has made, CHF JPY has not made it. So I'm beginning to now anticipate whether CHF JPY is going to just come and come down here to make this structure and then push up like Euro JPY. Can you get now? So that's what I'm anticipating for Euro
Yes.
CHF JPY.
Yeah, I have one question.
Okay.
Where would you take the move to see where the 61.8 is? From the previous low, not where it is here, from the previous one, from there, yes, from there, right?
Okay.
Yeah. Okay, thank you.
All right. So
Thank
now,
you.
yeah. Now, if this market right here, if this market was to be at demand level, right, then this one will now be a three-wave impulse. You know, we have three types of impulses, or three types of impulse rather. Number one, you have a mono wave, which is a one-wave impulse. You have a three-wave impulse, and we have a five-wave impulse. Okay, this is the one that ELLIOTT discussed. But experience and practice also show that you have a one-way impulse and a three-wave impulse. So now, if you look at this market now, you really can distinguish between the wave. You can't count 1, 2, 3, 4, 5, and you can't count 3. So this is an example of a mono wave. It's a mono impulse. Okay. Now, if this were to be in demand, you are not going to capture only here as the impulse. You are going to capture it together with this one as a three-wave impulse. And if that is the case, it then means if you are to take a fib, then your fib is going to be from this level to this level. And in that case, you'll be expecting the market to come to 50 to 61.8 here. Do you get? But because this structure is appearing as supply, at supply, market has no time to make a bigger correction, a bigger correction. No. It is only when market has a lot more upside to do that it will begin to make this bigger correction to push up. But this market does not have much upside to do. So in that case, I don't like to look at a three-wave impulse at the level of supply. I rather look at it piecemeal by piecemeal, and in that case, I want to look at this one. I would like to look at this one. Okay. And if I look at this one, then I'll be looking at 61.8. And you have the first leg, the second leg, you can have the first leg and the third leg to end here. Okay. And if you end here, then probably it will have succeeded in replicating what Euro GPY did. And from here, you can have a move to the upside. That is a first alternative. Another alternative is that anything can happen in the market in such a way that you have a massive push down here to break this low, even break this low. In that case, just say bye-bye to the upside. You just expect a corrective structure here and the market keep pushing down. So, but what happened between this level and this level goes a long way to determining what is going to happen next to this pair. But right now, we don't have enough volume in the market that can help us to take decision as to what the market has to do. We don't have the volume. Volume is very, very low right now in the market. Do we get now? It's very, very low. So are you okay now, Mark?
Yep. Thanks. Yes. Perfect. No, perfectly
So,
explained.
yes,
Thank you.
we don't really have volume in the market. You can imagine, look at a pair. Look at a GBP pair. Look at what it's doing. Look at what it's doing here, right here. This is a mess. This is a mess. This is a mess,
Yes.
honestly.
Yeah.
Somebody said BTC. All right, BTC. Okay. I put this arrow there. I put this arrow there that we expect BTC to break it to the top before it can find its way down. That if it doesn't break it to the top, it will not be happy coming down. If it come down, like if you make this structure this way and come down, forget it, it's coming back up. It has to come back up before it can sell again. That was what we discussed. But if you look at weekly on BTC, is it time for the upside? Is it still going to make another downside? Legitimately, it has right to proceed to the upside at that level. Why? If you look at this level here, it's broken here. Okay, and this is wave A. Okay, this is wave B. Since wave B breaks the top here, we expect that wave C here should break the low here, and it has broken it. So what else do we want? So don't be surprised. BTC might just have started its move to the downside. And remember, on the 12th of July, on the 12th of July, we forecasted when we are at 68,000 that is going to hit 20,000. That's exactly what it has done. And at 20,000, it's trying to reverse. What is going to tell us that we are going to start upside from here? So it's possible that BTC may have started the move to the upside. But let's carry out some check. Let's carry out some check. Let's carry out some check. Let's look at this point and this point. Okay. This point and this point. Then let's look at the corresponding points here. Right here, right now, there's no divergence. So there's no divergence on this time frame. Weekly, it's still too high. Let's go to daily. There's no divergence on weekly. There's no divergence. Okay. And then on daily time frame, what we are seeing here is a corrective structure. Okay, corrective structure right here in the middle. Okay, you have the move here, you have the correction, you have the move here. And remember that for it to continue a buy, I don't think an instrument that have had a big fall to the downside will now, reverse correctively like this. It's not going to work that way. So remember, you see a lot of supply lying down here. So at every point inside this level, we expect this market to have one more low. Okay, one more low. We're expecting it to make one more low, move to the downside. And again, if you look at, you have to check this size here and this one here. They are not the same. Okay, let's carry out equal leg test. Okay, can you see? So possibility of it making a low to this area is there, around 11,000 to 15,000. Okay, possibility is there because we have no divergence on weekly and daily. So, and on weekly, we have no divergence, and on daily, we are having a very clear corrective structure. So all we need is for this corrective structure to push up. Let it push up to this level. In fact, it will even be better if on, let's say on 1 hour time frame, if you can see what we are going to see is that it will make a correction, push up, correction, push up, correction, push up. It will now push down like this. Okay. As soon as you have this push down this way, just take a corrective structure and then start to sell BTC. I'm going to put eye on this and I'm going to get involved because as it is right now, any sell that you have on BTC is not going to stop until you break all this low, right? It's not going to stop. The sell is not going to stop until you break this low. And then you must ensure that you have an internal structure break for you to have an entry on it. Internal structure break. Let me show you how you ensure that you have internal structure break. You see here, you see here, you see this level, correction, push up, another level, until this one is taken, guys. This one, once it's taken, you have an internal structure break, okay? And then it is this one that, this move here that you can take a fib and then find a retracement before you can sell. Do you understand? That's it about BTC. Can you look at NVIDIA from weekly to daily? I'm anticipating a medium-term bullish move. Can you also look at UK 100 weekly and daily? Well, I don't trade NVIDIA. I don't even know what is called NVIDIA. Don't know. Don't know if it is crypto. If you know the NVIDIA, don't know. You tell me the short code for trading view so that I will check it. Structure is structure anywhere, anytime. Okay.
Mr. Net, it's the one I've posted. It's NVIDIA. NVIDIA. The way I've written it.
Okay, the
Just
way you
copy
put it, NVIDIA. Okay.
Thank you.
NVIDIA.
Just go. Yeah, the one on top. The one on top. Stock
Okay.
Nasdaq.
Okay.
Yes. Thank you.
That's a stock, right?
Yeah, that's a stock. Yes, that's a stock.
Okay. Well,
It's a tech company.
okay. One thing is that any instrument I don't understand, I don't like to do technical analysis on it. The reason why I don't like to do technical analysis on it is that, you know, every technical analysis you are doing, any technical analysis you are doing, you are looking at fundamental to shape your opinion. You understand? You are looking at fundamental to shape your opinion on technical. But if you don't know the fundamental that drive that particular instrument, it's going to be very difficult for you to have an informed opinion about it. But nevertheless, let's look at it on monthly. It's almost having the same structure with Bitcoin, but it has gone down so low, okay, which is very good. All right, you have this is the impulse. Okay, the correction is at 61.8, which is good. Okay, you have your correction well defined. First, you have this impulse. I can say we have 3 waves down, 3 waves in the middle. Then you need a 3 wave down. 1, 2, 3 down. Yeah, I think it's making a perfect sense. And this will be W, X, and Y. Okay, why I did not want to care that this structure is at 61.8. The reason why I don't want to care about that is that I've already seen a 3 wave move here. So I have a 3 wave move in the middle. So there is high probability that you have a 3 wave move at the end. And I'm already seeing, you know, a perfect 3 wave move in the middle that is being formed. Can you see? So you already see a WXY leg forming here. I told you structure is structure, even though I don't know this instrument, but I know the structure that is being formed. 1, 2, 3 here, 1, 2, 3 here, 1, 2, 3 here. Possibility of a running flat is even there. Then you have your move to the downside. Okay, by the time it breaks to the downside, you see that you have 3 wave move here, you have 3 wave move here, you have 3 wave move here. This being the connector in the middle. So that is W, X, and Y. So if you are holding a buy, you have to watch it. As soon as you get to this top, you can take profit. Okay, take profit. And you now look for a sell opportunity from this level to the downside. That's how it is for this pair. Let's look at 4 hours. Of course, you can't have a buy opportunity again. It has gone. You could have taken your buy after you made this move. Okay, this first leg here should have taken a fib of that first leg and target exactly at this is zigzag. That's 78% retracement. Somebody will say, why is this a zigzag? Why are you calling this a zigzag? Yeah, it is a zigzag, guys. It is a zigzag. You have the impulse, you have the correction, you have the impulse. So this is zigzag. If you take a fib of this leg, you have 78%. I told you, every zigzag must come to 78. So if you don't want to take it after this impulse, you see another correction, you take it. But as long as you could not get involved at this level, you have no business getting involved here. That is it. You have no business getting involved at that level because you are expecting it to form a structure like this at this level and push down. So it's getting closer to supply. You know, it's getting closer to supply. And once a pair is getting closer to supply, you do not even bother to touch it. Okay, if not, it will catch you off guard. All right, that's it about that's what I see about this instrument. You talk of UK 100, UK 100. Okay, I really had a buy setup on this UK 100 when I was still using a black, a dark this thing, and oh my goodness, and it hit the TP. Whoa, almost hitting the TP. You see, that's one thing. Once you are practicing, once in a while, just do the setup, leave it there. Even if you are not taking the trade, analyze more than 40 to 45 instruments, but I don't take more than maybe 3 in a week. But I just analyze them just for knowledge sake. That's all. Okay. So weekly. UK 100 weekly. Okay. We're still going to expect some downside after a little push up. I'm still going to expect some downside because if you look at it, 1, 2, and 3. If this is to continue a move to the upside, this one's supposed to be impulsive, not corrective as it is. So for the mere fact that it's going correctively shows us that we cannot expect this one to go that way. Okay, that's the importance of looking at higher time frame. And can you see what I'm saying as it's presenting itself on this daily time frame? Because you are having in the middle here the corrective structure here. Okay, you have a 3 waves up, then you have a 3 waves up, W, X, and Y. Can I do it again? Yes, I can do it again. You have a move down, a correction, a move down. This is a 3-wave structure. What is it correcting? 1, 2, and 3. Corrected. What do we want? Either 1, 2, and 3, or 1, 2, 3, 4, 5. But irrespective of whether it is 1, 2, and 3, or 1, 2, 3, 4, 5, this one must come to 50 to 61.8. And because of the kind of structure we're anticipating, just target this level. Because it is either a WXY, that's a zigzag, because you have a push, a very deep correction, another push. But this big correction did not break this low. This is a WXY in form of zigzag. So target 78% retracement here for your next move to the downside. So it's either this wave here is a 3-wave structure or a 5-wave structure. It can be either of the two, either a 3-wave structure or a 5-wave structure. Then from here, you have a move to the downside. Is that okay now? That's it about this instrument. So you can see that you might be thinking that at this level, it's going to begin, to move down, but it's not going to move down. It will correct and go up. Okay, you can even see, can you see in this time frame now, can you see a void here? That goes to confirm what I told you, that is going to come here. Can you see a void, a gap? This gap must be filled. This gap must be filled. Price is coming there to fill it. From there to proceed to the downside. This will be WXY in form of zigzag corrective structure. Is that okay now? Any other question? I think I've just done justice to all the questions that's being raised. So I want to call it a day at this level. Thank you for coming. See you next time, guys. Bye.
Thanks. Bye, Mr. Nets. Thanks for your time.